Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, according to newly published reports, investors have not yet given up on the 11-month-old world market's recovery, despite their wobbling since mid-January. And there's little evidence that they're going to do so anytime soon. Our panelists give their views on this and other issues today in this edition of the Roundtable. Editor-at-Large Steve Reitmeister, Director of Research Shiraz Mian, and Market Technician Kevin Matris. So this is really good news. I think it says something about investor confidence. What do you think?
It's generally good news, except that the individual investors don't have a good track record of knowing where the market's going to be headed. But
confidence speaks a lot, though, when you talk about investing in the market, right?
Yeah. Well, the investor confidence has something to do with what they believe will be happening in the future, where they're going to be placing their dollars. I'm just saying it's not a very good forward-looking indicator of what actually will happen with the market. But
okay.
but I'll say that personally, I happen to be in their camp that most, this was a healthy pullback in the market. It can't just keep going up month after month after month. And there wasn't reason to believe that that we're going to give it all back, as some people had thought. So this is just that saying that other folks have that same sentiment.
Is there a lot of cash yet on the sidelines, you think?
Yeah, I'm sure there still is some, but that's not the thing I would hold out for as an investor, because often we say that when things are rebounding from the bottom, we say, oh, wait until the rest of the money really flows in here. And I think the majority of the money that was going to come into the market has come into the market. So if you're thinking to yourself, wow, I want to get in the market because I want to see that landslide of money coming in, it's already there. Okay, so the reason to be in the market is if you believe economic conditions are getting better, which is going to drive up earnings, that is what will move up the market higher.
So then, Shiraz, having said that, and against that backdrop, you think that this market correction has already run its course?
My overall outlook for the market for this year kind of plays into this issue and kind of responds to this question as well. I don't really expect the market to do a whole lot in 2010, particularly when we compare that to what the market did in 2009. Now, having said that, does that outlook give you the flexibility to view these short-term movements like what we have seen in the last few weeks? Absolutely does. We are in a phase where the market is trying to find out its groove, where the market is trying to figure out which way the economy is headed. Are we going into a double dip or not? If there is going to be sustained growth, how good that growth is going to be when the labor market is coming back. So we may have these recurring fears, real and imagined, play out in the market. Sometimes we may have days of very good response from the market, and we may have some of these pullbacks too. So the latest correction may have run its course, but I wouldn't call it the last one.
Kevin liked that when you said real and imagined. Right. Which part of that did you like best?
It's interesting. The market is in a very interesting position in the sense that we've already seen about a 5% correction from the high. I think we're back above 10. I think we're at like 10.1 or something. I see the market probably chopping around from here until we can convincingly get through 10.4 or 10.5. Until we get through there, I think that the market can still potentially try to retest the lower levels, and that would be right around 96 or 97. So what's interesting from a technical perspective, right, you have that 200-day coming in at around 96, which is long-term support. Then you have that 50-day moving average, which is coming in just above the market at 10.4. So for right now, technically speaking, you are confined, but that's a pretty big range. But that being said, just because you may be in a relatively big range doesn't mean there's no opportunity. I think the good stocks will shine in this particular environment.
All right. So you think this is just a correction in an ongoing cyclical bull market?
I think it is a correction. Whether it has run its course or not is yet to be seen. But I do believe that this longer bull market that had started about 9-10 months ago, I think this is still intact, and I still think that we have a lot more to go.
All right, and even though we might have talked about this once before, let's reiterate for the viewers how you think investors, given all of this, should be invested right now. How should they be proceeding? Are there sectors that you like? Are there individual stocks that you like?
For me, I don't think that an investor needs to do anything different other than key in on the best sectors and industries, because that is where the true advantage lies. And if you are trying to find the best stocks within the best industries, I think that is where you're going to be able to see your excess performance. At the moment, though, I'm still looking at the strongest sectors and the strongest industries, but there is one industry that I'm really starting to eye quite a bit because I think it's been beaten down too much, and I'm really starting to key in on the home builders. I think that is something that is going to be an up-and-coming industry.
Interesting.
Yeah.
That is interesting to me. Shiraz?
Maybe a little early. But
Maybe a little crazy.
let's get that on record.
Any particular sectors that you like? Retail stocks, from what I'm reading, may be poised for a little bit of a comeback because of the toy manufacturers here doing better than expected.
I think the retailers have generally been doing very good, primarily on their inventory management and cost controls front. The top line picture for the retailers looks about as awful as it has looked in a very long time. That's not something that really excites me, Terry. The group that I like and I'm looking for stocks are commercial banks. Okay. I think the loan loss provisions and the overall credit cycle, the deterioration in that group has peaked. And historically, over a longer cyclical span, this group typically starts moving up and outperforms every other when you see that cyclical upturn. So I'm looking for opportunities in the commercial banks, not Wall Street brokers, not money center banks, your regular run-of-the-mill mid cap to small cap retail commercial banks.
Got it. Okay, so he doesn't play with toys. Doesn't make him a bad person.
That's right. I mean, I think his point about the retailers was very good. The discounters have been doing a little bit better than others, and there's a couple folks who are okay. But overall, until the unemployment picture is better, it's going to be hard to imagine a healthier retail sector. The one that I like was one of the strongest in 2009 and then took a beating towards the end of the year and in January, which is the technology sector. I mean, the earnings estimate revisions, the positive revisions, is still one of the strongest of any group, and you have some great names in there that have taken a beating. Now here again, my two counterparts here, put up some sectors and no names, which is kind of lame. Okay. So I'm more than happy to serve up a couple names, and so Thanks. I think here again, this is going to be a year that I happen to agree with Shiraz that is about, the market may not make too much headway on of itself, but that's not to say that there's not places in which to make a profit by being in some of the best firms trading at a reasonable price. Apple and Texas Instruments are two quality technology names that have had explosive earnings over the last couple of years. And here again, everyone's going to say, Apple, I know that. Yeah, but Apple has traded up as high as 215 and is now only about 203. Okay, and yet they keep banging out earning surprises. They come up with the iPad, yes, the worst named product ever, but a product that will sell millions of units and make a lot of money for the firm. And so the technology group, attractive overall. Two of the best companies in that group trading at phenomenal levels. So.
All right, so go ahead.
I don't want to be lame. I got two good picks for you in the electronics area. Okay. And that would be...
You don't want to serve some home builders? Let's get some of those great home builders.
That is the up-and-comer that you need to watch. But for strength, because again, that's where you want to key in on, you're talking about Tyco, TEL, and National Instruments, NATI, and I do have both of those.
All right. Do you own either of the two?
Of course I do.
All right. Okay, now that we got that out of the way. Quickly, Shiraz, is China still the wild card out there? Do we still need to keep an eye on the Chinese central bank?
We absolutely do. What China is trying to do in reining in these speculative excesses in its economy, a lot of other central banks and economists have been mulling and thinking about that same thing unsuccessfully and without reaching much of a conclusion. So China is trying to break new ground where many other central banks are very fearful to go into. So it's a major issue for all of us to see that can China really pull it off without seriously harming and slowing down their broader economy.
So they still hold the keys, you think, for global continued global growth?
They absolutely do. I think it's a far bigger issue to the global market and economy than Greece. Nothing against Greece personally, but I think China is the bigger story.
All right, those are just a few of the issues on everyone's mind here at the Roundtable. And with everyone here, we thank you for joining us, and we'll look forward to seeing you next time. I'm Terry Ruffalo.